my gosh, ladies and gentlemen, what a day today for Tesla stock and the AI trade. It was rough across the board. Even here today in after hours, Palo Alto Networks down almost 20%, and they lowered their guidance not by much. This really makes you question if Nvidia is not able to really impress investors tomorrow, the stock could suffer a similar fate. Now, here in this video, I'm going to play two clips from CNBC and these different fund managers and their opinions around Nvidia earnings. Really, they're saying the same things I have been for the last week or so now. There is likely nothing Nvidia can say or numbers they can put up that will appease investors. There is probably a 98+% chance Nvidia sells off after earnings. And it's pretty notable in this first clip. You know, expectations, the real expectations are maybe $23 billion for Nvidia's top line number tomorrow, whereas the actual analyst consensus opinion is for $20.5 billion. So even just, you know, beating the estimate, the median estimate on Wall Street, you still could disappoint. I think the biggest thing that will drive Nvidia stock is the guidance. Now, guidance is an interesting thing because last year Nvidia did $7 billion in this same year ago quarter. Now they're going to do $20 billion. So you have to imagine Wall Street is like, hey, Nvidia is going to do $23 billion this quarter. They're going to do $27 billion the next quarter. They're going to do $33 billion the next quarter. And they're going to do $35 billion the quarter after that. That's how extreme the expectations probably are for Nvidia. And judging on Palo Alto Networks and what they just reported, Nvidia's in a very tricky situation. Now, the real question is, does a big miss for Nvidia potentially cause stocks to sell off broadly? Is this the whole markets get whacked kind of event? Or could you see market cap leave Nvidia and head into other names? Now, you're going to get answers, I guess, opinions from different analysts and money managers here in this first clip. So I want to go ahead and roll this clip and give you at least what Wall Street is talking about. Then we will go over my expectations and what I think will happen with Nvidia, how I am trading this, and what kind of effect that could have on Tesla stock.
Joe, the elephant in the room happens tomorrow after the bell. Nvidia reports. Does everything come down to what this company reports at this point?
I think in the near term, yes, it does. Unfortunately, I wish it wasn't that way. I wish we could look at the earnings that Stephanie is citing and recognizing that it's a much better environment for corporate profitability than we anticipated. But unfortunately, the last several weeks, we've created this speculative fervor surrounding AI, and it's landed squarely in the semi names. We obviously see what ARM Holdings has done the last several weeks. We are seeing what Supermicro is doing as well. And it's extended into Nvidia to a certain degree.
Down 6%, right? It's maybe people getting a little bit skittish.
It's unavoidable.
Ahead of the number. You look at what, it's sort of like, what else can they, I think Kramer, this morning during the 9 o'clock hour, which we did together, was like, what else can Jensen Huang do?
Well, we've created nearly impossible expectations for Nvidia. And at a certain point, the comps are going to get more difficult as you move through 2024. And that's the reason why I've said, look, if you're not in Nvidia, you have to have a wait-and-see approach. Even if the stock gets away from you and goes higher, I think it'll go higher in a parabolic sense, you'll get an opportunity at some point in the future when those comps begin to get more difficult.
All right, so you're bleeding about $44, Sarat. Josh, I'll get to Josh in a minute. I'm sort of saving it up on purpose. But Sarat, you own this name too.
I do.
And what do you think is truly riding on this report tomorrow?
So I think a couple of things. I mean, expectations, to Joe's point, are huge, right? It's 20 billion is what is the estimate. 22 is the whisper. It's probably closer to 23, if not north. But I think what's really riding on it is, what are they going to talk about the total addressable market? what other markets are they looking at, and what are they going to talk about double ordering? Because that is the key that all investors, including ourselves, are fearful of. Now, stock's been parabolic. We've taken profits along the way. It's a 2% holding for us. S&P's 4%, but I'd be careful here. And to Joe's point, if it pulls back, it could be a chance for new money to get in. But if it goes up, then you just kind of wait and see.
I mean, I realize there are other things going on today, and we'll get to those and the impacts that they're having on the market. But to me, it's unavoidable to start here as you start a new week, Josh, because even you suggest it's, quote, the whole ball game for the most crowded trade on earth. And that is what Nvidia is going to deliver tomorrow, whatever it may be. And the impact that it's going to have on the market, you've got to believe it's going to be a sizable mover one direction or the other.
I think so, but a negative outcome for Nvidia is not necessarily a negative outcome for investors in the rest of the market.
So basically, the consensus view from that clip was there's really nothing Nvidia can say or put up number-wise that will cause Nvidia to rally further from here. The expectations are so high that it doesn't even matter. When Nvidia beats everything, which I'm sure they will, it's still going to be a disappointment, and Nvidia's stock is probably going to sell off. Now, the almost 6% or so sell-off we've seen today in Nvidia, including this 1.5% sell-off in after hours, does somewhat cushion the potential downside. You know, obviously, if Nvidia was up 6% today, the downside probably could have been a little bit more extreme. Now, at the end of the clip that we just played, Josh Brown with Ritz-Hold Wealth Management, he's someone that I highly look up to. He really likes to shoot it straight. The last line that he said is, what happens with Nvidia does not necessarily need to dictate what happens to the broad markets. Now, he goes on to refer that if Nvidia does fall, let's say 11%, that's what the options market is pricing in. That's the biggest pricing in we've ever seen before in the options market for any stock on a market cap basis. Markets are pricing in $200 billion of a gain or loss for Nvidia's market cap. If that is a loss for Nvidia's market cap, you could see money go into other areas of the markets, potentially into a stock like Tesla. Some of your beaten down mid to lower quadrants of our markets. Right now, it's been so concentrated in the biggest names on Wall Street, your Magnificent Seven, if you will, or Magnificent Six, as they are calling it these days. But I do think if Nvidia falls after earnings, it's almost guaranteed that your other Magnificent Six stocks will also sell off. Some people believe Microsoft has $1 trillion of value just based on AI. Now, I think there's potentially a bunch of different variables, right? These GPUs Nvidia are selling right now for $35,000. They're not normally supposed to be $35,000. Now, UPS just reported to us the lead times to actually get your hands on these higher end GPUs has fallen dramatically, about threefold, from 12 months down to about 3 months, just over the course of the last 2 or 3 months or so. So in other words, it's not going to take as long to get your hands on these GPUs. That, in my opinion, means you're probably going to see pressure on pricing. And that's where you're really in a bit of a shit show here. Because, I mean, even if Nvidia sells, more quantity of these GPUs, if the pricing is weaker, if the pricing comes down to, let's say, 20, 25,000, you're still not going to be able to put up impressive enough revenue growth. So the guidance here could be everything for Nvidia. If demand and or pricing hold up, then maybe Nvidia's stock only falls 2 to 5%. If pricing is forecasted to fall via that full year guidance, or potentially demand taking a little bit of a break here, that's where you could end up with a 20+% pullback in Nvidia. Again, because expectations are so high, if you come out with some really bad information that a lot of the markets are not talking about, like GPU prices falling, demand potentially taking a little bit of a breather here, that's not forecasted from any analyst on Wall Street. So I do think there is a real risk that Nvidia could fall big time coming tomorrow, and that would pull down the triple Qs, that would pull down the S&P 500 in a very dramatic way. But again, you could see a stock like Tesla that has been a loser as Nvidia has been a winner. Or you could see, mid or small cap stocks start to perform a little bit better as that market cap value that will likely be lost in Nvidia goes into other areas of our markets. But I think a question really is Tesla grouped into that category as big tech names, or does Tesla continue to trade as a small cap kind of stock? I do think that is a question we don't have answers to, because if you look at the markets today, I mean, Tesla sold off about 3%. In after hours, Tesla is not selling off the same way that your other big tech names are. Tesla's only down about 17 cents, a tenth of 1% in after hours. Look at Nvidia, down almost 2%. SMCI down 2.64%. PanW, Palo Alto Networks, down 20% here in after hours. We have the 290 puts, the stock's at 294. That trade should be a big winner. But if you're judging off of the move here in Tesla in after hours, maybe you can make an argument that today was kind of a breather for the broad markets, right? Everything kind of sold off. Small caps, mid caps, Tesla, large cap stocks, everything. But maybe this move in after hours that we're seeing shows that Tesla's not going to correlate as much with your big tech names. Now, just to put this into a little bit of perspective, Palo Alto Network, their shares plunge after the company cuts full year billings and revenue guidance. Now, the numbers themselves came in just fine, beating expectations on EPS and on revenue for this quarter. Now, the company is now guiding to full year total billings between 10.1 and 10.2 billion, compared to its previous guidance of 10.7 to 10.8 billion. And the stock is down 20%. Palo Alto Networks also expects full year revenue to range between $7.95 to $8 billion, compared to its prior guidance of 8.15 to 8.2 billion. So this is roughly a guide down of like 4%, right? On full year numbers. The problem here, and why I'm relating Palo Alto Networks to Nvidia, is maybe markets are expecting a full year guidance of like 75, 80 billion for Nvidia. If Nvidia comes in with like a $60 billion full year guide, that is far off of expectations. And if they're going to do Palo Alto Networks like that, don't think they won't do Nvidia like that as well. But again, judging just based on what Tesla's doing here in after hours, it's not really trading like Nvidia, like your semiconductors, like your big tech names that are selling off in after hours. Maybe Tesla can do its own thing following Nvidia earnings, which come out tomorrow, and maybe Nvidia selling off might be a positive for Tesla, like we have seen recently. Recently, when Nvidia sells off, Tesla has been really green, and vice versa. When Tesla is really red, Nvidia has been really green. Let me know what you think the correlation here will be coming tomorrow based on Nvidia earnings. Will a move down in Nvidia stock be good or bad for Tesla stock? But this is really the moment of truth for your AI trade broadly and for your big tech stocks, because if Nvidia does again plummet, Microsoft's likely to plummet, Google, Amazon, all of these names, and when stocks are, broadly speaking, the triple Qs trading at all-time highs, that's a bit of a problem. Now, something else I want to point out that I think is very important for you guys to understand, this is a chart of the US dollar. Now, just to put this simply, when the dollar rises, that means multinational companies take in less dollars when they are taking in, foreign currencies. So if you're taking in foreign currencies and converting that back to a strong dollar when the dollar is rising, and you can look at this chart for yourselves, it's DX, ticker symbol DXY, they bring in less dollars. This correlates directly to the markets. When this chart goes up, stocks tend to go down. This was 2022. Just for an example, right? This huge rise in the dollar, about a 20% rise in the dollar. This was the Rona back in March 2020. Look what happened. The dollar fell all throughout 2021 until you started to rise back in like September, October of 2021. Stocks did well during this period of time. Stocks did very poorly in 2022. What happened? The dollar fell in 2023. Stocks did well, right? Now, the dollar rose from about July 2023 to October, November of 2023. What happened? The market seen a 10.5% pullback. The dollar fell. Markets rallied from November until December. Around December 28th was the low in the dollar. That makes sense. Stocks rally during this time. Now, recently, ever since the start of 2024, the dollar has been rising. So what does that mean stocks should have done? Stocks should have fell. The S&P 500 should be a lot lower today based on this correlation we have seen over the past 4 years. The S&P has done nothing but hit all-time highs. This means that the AI trade is probably a lot more important than people actually realize. Now, the broad S&P, the broad NASDAQ have done very well. At the same time, the dollar has been rising. What hasn't done well? Tesla, small caps, mid cap stocks. They've been falling as the dollar has been rising, but not the indexes. So you could see a big catch-up effect where the markets, the triple Qs and the NASDAQ, well, the triple Qs, NASDAQ 100 and the S&P could really start to crater here as maybe the small and mid-cap stocks do start to recover. Again, if this does not make sense with a dollar correlation, do this for yourselves. Pull this up on your charts, whatever you are using. DXY. Anytime DXY, the dollar goes up, stocks go down. The S&P. Anytime the dollar goes down, stocks go up, right? They inverse each other. So recently, I've been pointing this out to you guys here on the channel for a while now, and it just hasn't correlated on the index level. Maybe that means we are actually in for a crash if the AI trade does falter here. The AI trade is probably the thing that has kept stocks at all-time highs. The S&P and the NASDAQ at all-time highs. If you do see a give back there with Nvidia, you could see the NASDAQ really pull back here, especially considering CPI came in hotter than expected, PPI came in hotter than expected last week, and retail sales came in worse than expected. Besides the AI trade, there's not much holding stocks up here. Okay, as far as the expectations here, for the fourth quarter, analysts expect Nvidia to report adjusted earnings per share EPS of $4.60 on revenue of $20.4 billion, up from the adjusted EPS of 88 cents on $6.1 billion a year ago. Keep in mind what that individual said in the clip is this is the headline expectation. The real expectation could be 23 billion or more for Nvidia's quarter. UBS came out with their expectations of about 23.5 billion for revenue with a next quarter guidance of 25 to 26 billion. So yeah, the expectations are actually a lot higher than 20.4 billion. Now, that is a year-over-year increase of 234%. To put Nvidia's performance into perspective, the company reported $27 billion in revenue for all of 2022. So they're expected to almost top that in just one quarter. Analysts expect Nvidia's data center revenue to be $17.2 billion in the quarter, up from $3.62 billion in the same quarter last year. Huge gains year over year there. Now, the real expectation could be 20 billion for that. We just don't know. But what's baked into the stock is probably higher than 17.2 billion. And this is a visual representation of Nvidia's results, actually like in a chart form. Nvidia was just steadily growing 2021, Q1 2023, and then they actually seen numbers start to fall as pricing was really pressured. And then what happened? Nvidia really shocked the world Q1, their fiscal Q1 2024, and then it's been crazy ever since. Guys, Nvidia is not going to rally tomorrow. I know that sucks. If you are long in Nvidia, you have some calls out there. That's just my personal opinion. You want to be ready for a substantial decline. Now, again, question is 5% or 25%? That's what we're looking at here. Now, it says, analysts will also be keeping an eye on Nvidia's forward guidance. The company has easily surpassed revenue guidance in the last few quarters, and another beat would signal continued strength in the AI trade. To say that expectations for Nvidia are high would be a wild understatement. A number of Wall Street analysts have changed their price targets on the company's shares. UBS analyst Timothy Curry increased the bank's price target from $580 to $850, and Stifel's Ruben Roy setting a new target of $865 from $665. Wedbush's Matt Bryson also increased the firm's price target on Nvidia to $800 from $600. Nvidia's growth, however, is facing challenges from all sides. The company's chief rival, AMD, is investing heavily in its own AI chips, including its new MI300X, according to AMD, the chip surpasses NVIDIA's H100 in certain workloads, but NVIDIA has refuted those claims, saying AMD's testing was incomplete. Intel also has its own server chips and continues to build on their capabilities. NVIDIA customers are also increasingly looking to develop their own specialized AI chips to ease their reliance on NVIDIA's offerings. Amazon, Google, Meta, Microsoft, and Tesla are just a few of the big name firms that either currently offer or are actively developing their own in-house AI chips. Those chips are designed specifically for each company's needs, improving efficiency and power consumption versus NVIDIA's more generalized chips. But NVIDIA isn't taking this threat laying down. According to Reuters, the company has met with Alphabet, Amazon, Meta, Microsoft, and OpenAI to discuss building custom chips for them. Another big question will be the export controls in China. And it looks like some companies in China, they don't want these lower end chips that NVIDIA has created for the Chinese market. So that's another potential problem for NVIDIA. Again, I will repeat, the full year guidance is the most important part. What does full year guidance look like? Now, if we come in at $20 billion of revenue, I'll tell you, analysts, they expect that growth to continue. So you're looking at bare minimum, the next 4 quarters, analysts are going to be expecting around $80 billion in revenue. The NVIDIA is just not priced for a deceleration in growth here. They're not priced for a sequential negative number on a quarter by quarter basis. That would say to me that full year guidance expectations are around $80+ billion for the next 4 quarters. That might be far too high for NVIDIA. Maybe 60, maybe 50 billion could be a more respectable number. Guys, this is the moment of truth for our markets. This could start a major pullback. Now, how am I looking to trade this? Well, I think, again, based on even Tesla today, this was kind of a sell-off across the board. But look at Tesla in after hours. Tesla in after hours is only down 2 cents. It's looking to go positive. Look at Nvidia, down 1.68%. SMCI down 2.5% in after hours. Palo Alto is getting crushed. Now my puts are in the money, right? That's a 21% fall in after hours. Tesla is shrugging all of this off. Even a 0.25% decline in the QQQs in after hours. Maybe a good way to trade this would go long Tesla, short Nvidia, or short the triple Qs. Now, the way that I personally traded this is I just bought puts on the triple Qs. Now, I'm going to share with you guys my trade. If you guys want to see these trades when I make them, check out that link down below in the description of this video. Now, I do have some other, puts on the triple Qs as well on other portfolios. This is the one that, I just wanted to make this trade on specifically. I did get the QQQs for 10 puts, 5 of them for like $124 a piece. I think the premiums here make a lot more sense than like Nvidia. I think playing puts on Nvidia, way too difficult. There's way too much priced in with an 11% move priced in. But even if Nvidia does fall on the low side 5%, I mean, that's going to pull down Microsoft, Apple, all these other stocks. And these puts on the triple Qs going for $123 right now you only need a 4% drop to break even. Potentially, the triple Qs could fall 2+% in after hours tomorrow following Nvidia's numbers if they are not as good as expected. So I think the risk to reward makes a lot more sense here on the triple Q puts rather than Nvidia directly. Now, this is not financial advice. This is not a recommendation. You will lose all of your money if you trade anything I talk about. I'm just showing you guys for full transparency's sake. It could get rough out there. And instead of potentially spending a lot of money on Nvidia puts that don't make sense, I think other, ways to hedge your portfolio make a lot more sense. I think if Nvidia did fall like 20% tomorrow and the AI trade really did give up, the triple Qs could easily fall back to 390, 380, 370 because again, this market is really being held up by the AI trade and really only the AI trade at this point. So let me know what your opinions are in regards to this. How are you trading or hedging your portfolio with Nvidia? Do you think a stock like Tesla or other interest rate sensitive companies, small cap, mid cap companies could actually benefit if Nvidia does fall? Let me know your opinions on that down below in the comment section. Are you bullish? Are you bearish? Do you think Nvidia is going to rise or fall following their earnings? Thank you for watching, guys. Enjoy the rest of your day. and I will see you in the next one.